The reason why you are still unprofitable is due to these three things. Number one, you are overcomplicating your strategy. Okay, you are trying to look at different things, trying to combine all the ICT concepts in hopes of taking good trades, but it backfires and you blow your accounts. Number two, you don't have clear set of rules. So you come into the markets randomly with no plan, no structure. You just trade. Okay. And number three, you're using multiple strategies at once. So you're not sticking to your plan. You are not trading one model. You are just trying to find a setup. So just you can get that dopamine hit when you take a trade and see the blue numbers go up. And in return, you take a loss and then you overtrade, you blow your accounts. All you really need is one simple, profitable pattern that repeats itself every single day. And that is what I'm about to teach you in this video. Now, I use this model live every single day in my Discord, and I'm not going to hide anything in this video. I'm going to give away the entire strategy for absolutely free. So without wasting any more time, let's get on with the video, and make sure you hit the subscribe button if you want to see free educational content. So, number one, what you have to do is trade after 9:30 a.m. New York time, okay? So this is where the most of the liquidity is present in the market, and that's when you're gonna get big moves. If you're trading London or Asia, you might experience consolidation, and in that chop you can take the best setups, but then again, due to the chop, you will take losses. So number one, you're gonna be trading at the after 9:30 a.m. New York time. Make sure you go here, change your time zone to New York so you don't get confused. The second step is before the 9:30 a.m. New York open, you want to go onto the 1 hour time frame and see which PD arrays are being respected. Are we respecting bearish PD arrays, right? Or are we respecting bullish PD arrays? And you want to look that before 9:30 open. Now, if we are respecting bearish PD arrays, then that means there is a draw to the downside. So what you want to do is on the 1 hour or 4 hour time frame, mark out some equal lows or a significant low that price is moving towards. Okay, and similarly, if price is respecting the bullish PD arrays, then there's most likely a 1 hour or a 4 hour swing high or equal highs that price is going to target. With that in mind, we have our bias. So first step, we identify our bias. We see if we are respecting bearish PD arrays and we are disrespecting the bullish PD arrays. So a bullish PD array, let's say there is a bullish fair value gap and then price just breaks through it, then that just means that we are in a sell program. And again, for this, if we disrespect the bearish PD arrays, we are in a buy program, and you want to target, you want to mark out the clear draw on liquidity, right? You don't have to be right 100% of the time for this, but when you have this, it gives you a very clear picture for the entry model that I'm going to teach you in this video. Okay. So let's suppose that our bias for the day is bearish, right? The order flow on the 1 hour time frame is bearish. Now, what you want to do is drop down to either the 5-minute or the 15-minute time frame. Okay. So ideally, what I do is I start off on the 5-minute time frame. So after 9:30 a.m. New York time, what I'm waiting for is for price to create a fair value gap in the direction of my draw on liquidity that we marked out initially on the 1 hour or 4 hour time frame. So after 9:30, we want to keep an eye on the first fair value gap that forms on the 5 or 15-minute time frame. So let's say that there is a 5-minute fair value gap that forms after 9:30. Now, if we don't see a 5-minute gap, you can check the 15-minute if we are forming one. So in this case, let's say we have a 5-minute fair value gap. Now, the next step is that you are waiting for price to tap into your gap in that 5-minute gap, and that's where our entry model comes in. So after that, when price is in the 5-minute fair value gap, you want to drop down to 1-minute time frame. Once you are dropped down to 1-minute time frame, you want to keep an eye on the manipulation leg. So from this low to this high, you want to identify 1-minute bullish fair value gaps in this manipulation leg. So this manipulation leg tapped into the fair value gap. It also swept some form of liquidity, right? And let's suppose that there is only one fair value gap. So let me just mark this out real quick for your understanding. So this is a 5-minute FVG, right? And this right here is the 1-minute FVG. So let me just mark that out real quick. FVG. Okay, perfect. So when we have our clear draw on liquidity, which is to the downside, after 9:30 a.m. price has created a 5-minute fair value gap, And when price is inside the 5-minute gap, what you want to do is simply drop down to 1 minute and then identify a fair value gap in this leg from this dealing range low to this dealing range high, right? And the next step and the final step is that you want to wait for price to inverse below this. So meaning a candle should close below this fair value gap. And when that happens, this becomes 1 minute inverse fair value gap. Okay, so the fair value gap, the bullish fair value gap is inversed. Now this is aligning perfectly with the 1 hour order flow that we looked at before. And also we have clear sell side liquidity to the downside, but I don't normally want to target this because price can again pull back and stuff. But with that in mind, you know the direction that where price wants to go, right? So simply what you can do is take a short position as soon as price closes below this fair value gap and we have 1 minute inversion. You can put your stop above the high, and then you can go for first of all, you can take one partial at this low over here. Let's say there's this minor sell side liquidity, and then what you can do is go for 1 to 2 risk reward. This is what I do most of the time. But there are some key rules that you have to follow. This is not that simple, but it is actually that simple when I explain to you what I'm talking about in a few minutes. So in this dealing range, right? So from this low to this high, right? There could be multiple fair value gaps. So right now I marked out only one fair value gap, and that got inverse and we took a short position. But let's say that there is one more fair value gap down there on the 1 minute time frame. Now, what you want to do is wait for price to inverse all the fair value gaps in this dealing range, from this dealing range low to this dealing range high. I want to see price inverse all the fair value gaps, and then that would invalidate the bullish order flow on the 1 minute time frame. Okay, so let's say that there is a 1 minute fair value gap here as well that got inversed. So now we have inversed all the fair value gaps, or in simple terms, you can say that the first fair value gap that forms inside this leg needs to be inversed before we can look for a short position. So when price inverses below these two fair value gaps, or there could be three, you can take a short position. Again, you can put your stop above the high, and then you can target 1 to 2 risk reward ratio. Now, when price is inversing these gaps, I want to see a V-shape recovery. So what I mean by this is this type of behavior where price goes up, taps into the fair value gap, and then we get continuous bearish candles that inverse the fair value gap. Okay, I don't want to see price do something like this where it just consolidates like this and then it inverses. Well, that leaves behind buy side liquidity, and then we want to avoid that setup most of the time. Okay, now for extra confluence, you can add in SMT divergence. So if on NQ we create a higher high, higher low, and then a higher high, but then on ES, if we fail to do that, then that is your extra confluence. However, it is not necessary. It just gives you more confidence in your trade. Now there's one more key thing that you can try and use, and that has helped my win rate increase significantly, is that what you want to do, that this is very crucial. Okay, so first thing first, in this dealing range, we have 1 minute fair value gap, right? Now what you want to do is use the 1 minute, 2 minute, 3 minute, 4 minute, and 5 minute time frame. So if there is a fair value gap on the 1 minute, you want to check the 2 minute time frame to see if there is a fair value gap on the 2 minute time frame as well. Now the logic behind this is we want to take the highest time frame inversion, and the highest is 5 minute. So we're going to gradually check each time frame from 1 minute till 5 minute to see if there are fair value gaps in this manipulation leg. So if there's a fair value gap on the 1 minute, check the 2 minute. If there's a fair value gap on the 2 minute, let's say over here, and let's just call that 2 minute fair value gap, you want to check the 3 minute time frame to see if there's a fair value gap in this leg on the 3 minute. If there is not a fair value gap on the 3 minute within this dealing range, then you want to stick to the highest time frame, which is the 2 minute. So we had a fair value gap on the 2 minute, but we don't have it on the 3 minute. And again, if there's a fair value gap on the 3 minute, and then you're going to check the 4 minute. If there's no fair value gap on the 4 minute, you're going to stick to 3. If there is a fair value gap on the 4 minute time frame, right, you want to check the 5. And if there's no fair value gap on the 5, stick to 4. And finally, if there's a fair value gap on the 5 minute, then just use that fair value gap to be inversed. I hope you understood what I talked about here. So let's say there's a 2 minute gap, you take your entry, and then you can go for a simple 1 to 2 risk reward ratio. Now for break even rule, and after that I'm going to move on to the examples, is mark out the closest liquidity level to after your entry. So you take a short position here when price closes below this, right? So this is the closest low after our entry, closest low to our entries. So this is going to be your break-even zone, okay? So I know this is very small, but this is how we protect our capital. Again, in trading, your main goal should be to protect your capital rather than hitting home runs, right? So you go break even here, and the price can retrace back. If it truly wants to go down, it's just gonna melt through like butter through this low. It shouldn't retrace back up, because then that could just mean that we are going to continue higher in most cases. But that's pretty much for the entire strategy. Let me give you guys some examples, and then we'll end the video. All right, so here is example 1, and this happened today. So I was looking at NQ, and you can clearly see that we are bearish, okay? So we had SMT around this high, and we are respecting this bearish fair value gap. And then of course we had some 3-strike pattern liquidity sweep, and you can see we're kind of like consolidating. But coming into the day, you can see that we respected this bearish fair value gap during London, and then we pushed down, and then we also inversed these bullish fair value gaps, this bullish fair value gap over here, indicating that we are in a sell program. So if you look to the left, we have this 1 hour low, significant low, which is also the New York's low from Tuesday. So with that in mind, you can say that, okay, my draw is to the downside over here. So now what you want to do is, since our bias is bearish, we have a clear draw on the 1 hour time frame. And you can also clearly see that we were respecting PD arrays on the 5-minute as well after we swept the Asia. So we respected this auto block, we respected kind of like this auto block over here, and then we were just pushing down again and again and again. So again, we had this continuation purge, right? And again, we kind of inverse. So you can clearly see that we are bearish. So now what I'm waiting for is for price to create a 5-minute fair value gap or 15-minute fair value gap after 9:30. So at this point, we don't have a fair value gap. So we are sitting on our hands and waiting for price to give us a sign that now it's ready to deliver to us the sell side on the 1 hour time frame. So if I play this through, you can see right here that we form a 5-minute fair value gap. And keep in mind that the sell side liquidity is not tapped yet. So what we can do from here onwards is drop down to 1 minute time frame. So again, it is still not tapped. So let's go to the 1 minute time frame and see if price goes back into that fair value gap. Now price is inside the fair value gap, and you can see that from this dealing range low to this dealing range high, we have 3 fair value gaps. We have one over here, and then we have one over here. Actually, we have 2 fair value gaps. But we want to also check the 2 minute time frame to see if there's a fair value gap. So right here, you can see that we have formed a fresh 2 minute fair value gap, right? Now we want to check the 3 minute time frame, and here we don't have a 3 minute fair value gap. As you will see, we didn't create a 3 minute fair value gap. So if I go on to the 2 minute time frame, you can see that we inversed below this 2 minute gap. So then you could have taken your short position here, put your stop somewhere around here above the inversion and above this big bearish candle, and you can simply go for 1 to 1.5, and let's see how this plays out. And bam, your target was hit. Now I'm not sure if you put your stop even above the bodies, probably it hit 1 to 1.5. Yes, it hit 1 to 1.5. So usually what I do is I go for 1 to 2 if the draw on liquidity is not hit. But in this case, we had our draw here. So the best play here would have been to just go for 1 to 1.5. And once you can see the sell side was swept, we kind of inversed above this 1 minute gap here, and then we pushed up. So let's move on to the next example. All right, guys, so here is example number 2. So over here, coming into the day, we were bearish, but then we swept this major sell side liquidity on the 1 hour at 9. So if I go onto the 15-minute time frame, you can see that we swept this low exactly at 9:30. So the draw on liquidity was swept before that, but what we can do is identify bullish draw on liquidity. So over here, I can clearly see that there is this high, significant high over here. And let's just go to the 5-minute time frame to see if we have some clear equal highs. And honestly, this right here looks good as well, this high over here. So let's just go around this area. So with that in mind, you have to use some discretion, right? This is like real trading, guys. I can give you a mechanical strategy. It does work. It can work. But if you become your own strategy and think logically sometimes, you can clearly see that we swept the major sell side. That was our target for the day. So after price sweep sell side, where is it gonna go next? And it's gonna target, first of all, the London high, which is unswept, right? So a very good pool of liquidities are London high, Asia low, London high, London low, previous day high, previous day low. So right here, you can see that we took out the London high, but we have some equal highs, relative equal highs up here, you can see. So now you can see that we are clearly bullish on the 5-minute time frame. We are respecting PD arrays on the 5-minute as well. So price is going towards something. Your goal is to identify where it wants to go. So this high looks very juicy, and again we have this 5-minute unfilled fair value gap that you can target, right? So now let's wait for price to tap into this 5-minute fair value gap, and this is the first fair value gap that forms after 9:30. So you can see after 9:30 open, we didn't create any fair value gaps until here. So let's mark that out, and let's wait for price to tap into that fair value gap. So let's drop down to 1 minute, and price taps into that gap, and you can see right away is that we have this 1 minute fair value gap. Price also swept this low over here. We're coming off from a 5-minute gap. Now we have a fair value gap on the 1 minute, so let's check the 2-minute time frame. And we don't have a 2-minute fair value gap, so we're going to stick to the 1 minute. So let's wait for price to inverse above this gap. So you can also see we have continuous bullish candles that inverse above this gap. So right here, you can take a long position. You can put your stop below here, and you can go for 1 to 2 right there. And let's see how this plays out. Bam. The full TP was hit. Let's move on to the next example. All right, guys, here's another example. So on the 1 hour, you can clearly see that we are respecting bullish PD arrays. We are creating higher highs and higher lows. And if I go back here, we can see that we have clear buy side liquidity to the upside. Okay, so if price is going up, then it has a target that it needs to go towards. And over here, we have these clean equal highs. So let's drop down to 5-minute time frame, and let's wait for price to create the first fair value gap after 9:30. So at here, we create a fair value gap. Okay, so we have the first fair value gap that forms after 9:30. You can also utilize this as well, but ideally you want to keep an eye on the first fair value gap that forms after 9:30. You can also look at the fair value gaps that form after this if the drawn liquidity is still there. So, but this is the highest probability, the first fair value gap that forms after 9:30. Okay, first presented fair value gap on the 5-minute or 15-minute time frame. So price taps into that gap. Notice how we didn't close below this first fair value gap, right? And notice that we swept this 1 minute low. We tapped into the gap. Now we have 2 fair value gaps. So we have one over here, and then we have one over here. But we want to check the highest time frame. So let's check the 2-minute time frame. We have a fair value gap on the 2-minute time frame around this area. So you want to check the 3-minute time frame as well. We have a 3-minute fair value gap as well. Let's check the 4-minute time frame. And you can also see that we have a 4-minute fair value gap created right here. Let's check the 5-minute time frame. And we don't have a 5 minutes, so we're going to stick to the 4-minute time frame. So let's wait for price to inverse above this gap. And right there, we have inversion, continuous bullish candles. We can put our stop below these bodies, and we can go for, honestly, 1 to 1.5. Let's say we can also go for 1 to 2 here, but I'm not sure if it hit it. Actually, it did hit it, so you could have gone for 1 to 2. But again, as I said before, price is not always going to go towards your original drawn liquidity right away. It's going to have pullbacks and stuff, right? So for example, we had a pullback over here, and then later on, price did eventually go towards that buy side. If I go to the replay mode, you will see that we did actually go up. We came back and swept this low. We swept this low. And right now, okay, actually, we are just pushing towards it. So for the next day, you can keep in mind that we might be heading towards this buy side liquidity that we have. So this is the entire strategy that I use to trade live with in my Discord. If you are interested, there's a link down in the description. It is not necessary, but you get like 24/7 support from me, and I analyze your setups and also live trade with you every single day using this exact setup. Link down in the description. I'll see you guys in the next one.